Good evening. This is Ken Long from Tortoise Capital, September 10th, 2009, the evening. We're going to take a look at the market health check here real quick. You can see we're still in bull quiet mode. Volatility is low. ADX has hooked under 30 and is starting to move back up with plus DI greater than minus DI and pulling away, meaning that the bullish strength is increasing. You can see we've just completed a move from oversold to overbought conditions on Williams percent R10, meaning that it's time to ensure that we are preserving profits from that move, being careful about initiating new positions at overextended moves. On the other side, we have pulled higher than 104, which we saw was an important resistance level for over the past 2 weeks, and so that's a positive sign. But since we are 5 days up in a row, there is cause to be concerned about this move being overextended. Of course, you balance that with a look over the past 2 months when we've seen the market has been able to go up 18 days in a row. So at the end of this move here, we're alert to both possibilities. However, I think the odds are against explosive moves up from here. We're prepared for it, but we wouldn't expect it. The previous support levels of 102, 100, and 98 remain in place, with 102 being the 20-day moving average, 100 being a swing low, 98 also now coinciding with the 50-day moving average. So that's the market health check. On the daily summary, we can see again bull quiet. We closed at 109 on the 10-day index, which means that we are 9 index points higher than the previous 10-day trading range, so 9% higher. 9% of the 10-day trading range, we closed that much higher, so that's a significant breakout. You can see the 10-day max pain candidates include some old reliables in there, McDonald's, Travelers, and Kraft that we'd be interested in. We're open to the possibilities that continuation plays on positive momentum in Disney, Procter & Gamble, since those are old reliables as well. See the pivot is now above 104, with it 104.28. No signals in the overreaction system or the channeling system. We can see, let's see, on the overbought, oversold conditions, old reliables, Kraft, McDonald's, Travelers, Walmart, and Pfizer at the low end that are under 40 on the overbought, oversold indicator. And then at the upper end, breakouts closed higher than the previous 10-day trading range. You can see all the ones in green. So if you're a believer in momentum, those would be naturals. Inside the daily tactical, the big losers today, Kraft, Travelers, and Intel, with Kraft and Travelers both being exceptional max pain on the 10-day and the 3-day, which makes them to be of interest. And you can see that their 10-day indexes are below 10. Everything in green was closed at a 10-day index of 91 or higher, and you can see that actually 1, 2, 3, 4, 5, 6, 7 of those tickers from Chevron and above all closed higher than their previous 10-day trading range, with Procter & Gamble and Disney closing half again higher as the previous 10-day trading range, and you can see the power of the move from the previous 10-day high. So if you're a believer in short-term momentum, those would definitely be on your short list. In the ETFs, you can see the green highlights here indicate everything that has closed at 90 points or higher on the 10-day index, and everything over 100 has closed outside of its 10-day trading its previous 10-day trading range. XLY consumer discretionary did, and you can see it's a min pain on the 3 and 10-day. The commodity sectors still are showing some oversold conditions, even though they're all doing fairly well on the 10-day index. I think there's still some room to grow. For example, I'm stalking DBC very carefully. So that's a quick look at the daily tactical. I'd be looking at the extremes once more. I think Kraft, Travelers, and Intel have some room to catch up, and I'm interested in one-day momentum pops on Procter & Gamble and Disney especially. I'm concerned with the market being this overbought, however, that we could very easily see a gap up caused by chasers from end-of-day data trying to get on board, a gap up, and then a powerful sell-off in the morning to shake out the loose hands. That wouldn't surprise me at all. So, thanks for your attention.